Michael, you've been on a bit of a tear buying Bitcoin for a few years here. You added 390 more Bitcoin this week, you announced, bringing the total to, give or take, 640,000 Bitcoin, over 3% of the total supply. So I think a natural place to start the conversation is why Bitcoin and what is Bitcoin to you?
You know, I think the last 12 months, we've had a lot of clarity with regard to that. The digital assets industry is kind of bifurcated into two segments. There's digital capital, and then there's digital finance. And Bitcoin has emerged as digital gold, but a store of value. That's capital as a store of value. And that started with the SEC approving the ETFs about a year and a half ago. But really, the catalytic event was in March at the crypto summit at the White House. And at the end of that day, David Sachs said, you know, Bitcoin is digital gold. And he said it publicly. That's the policy of the administration. So from that point forward, you had kind of this rippling viral global consensus, and everything kind of just locked into place. Okay, that's digital gold. What's the killer app for gold? It's gold-backed credit. For 300 years, the Western world ran on currencies and credit instruments that were backed by gold all the way up until Nixon took us off the gold standard in '71. So half the industry is digital capital, which is Bitcoin, and then digital credit, the credit instruments built above it. And we have just laser-like focused upon building out that stack. The other half of the industry, which has really exploded in vitality over the past 12 months with the new administration, is digital finance. And it's basically the tokenization of currencies, the tokenization of stocks, of bonds, of real-world assets, of brands, every type of tokenized application, and that has been a massive tailwind and source of energy for all of the proof-of-stake networks.
These are not new narratives to people who have been in the Bitcoin space for quite a while, but we're finally seeing it catch fire, as you mentioned, and not only at the retail level, but at the institutional level. And a day doesn't pass anymore where you don't get a major announcement from a Morgan Stanley, JP Morgan, Citibank, Wells Fargo about either custodying the assets. JP Morgan last Friday announcing they'll accept Bitcoin and Ethereum as collateral. You were very early, obviously, to the institutionalization of Bitcoin. So what do you make of this trend of institutionalization? Where are we on that path?
I think for Bitcoin and the entire crypto industry, for it to 10x from here, the major catalyst is the embrace and adoption by the major banks. So the actions of JP Morgan, Bank of America, Wells Fargo, BNY Mellon, PNC Bank, the support that's coming from Schwab, from boutique banks like Texas Capital, all of those are big actors. The actions of Morgan Stanley in the space, they led our IPO of Stretch, which was the biggest IPO of the year, and it's basically a Bitcoin-backed credit instrument. So I think probably the most auspicious thing is to see, I didn't mention Citi, but the support that's coming from Citi, from JP Morgan, from Wells Fargo, from Bank of America, all of those banks are revising their crypto policies, which were very restrictive and blanketed as of a year ago, and they've changed their view toward the entire industry and toward crypto assets as collateral in the past, in some cases, 4 weeks. So this is a very important month.
Do you feel in your conversations that those are a reluctant embrace or that they're actually excited?
I give them the benefit of a doubt. If you roll back to the crypto winter, the regulators shut down, and I would say almost assassinated Silvergate and Signature Bank. Those were two good banks that were put out of business by the previous administration.
On a Sunday.
And that traumatized the entire banking establishment, right? If you combine that with the guidance that came from the Fed and the regulators, I think they were all traumatized, and their view is like, hey, the bank's been around for 100 years. I'm not going to blow it up on my watch. And so they all took very conservative extremely paranoid policies. And maybe the paranoia was injected into them by the administration. I think after November 5th, we knew there was going to be a new view toward digital assets, but I don't think people realized how constructive and positive it would be until you got 12 pro-crypto, 12 pro-Bitcoin cabinet members. And then Scott Bessent went out of his way as the Secretary of the Treasury to make sure that Treasury and the OCC and the FDIC and even the Federal Reserve provided very positive, constructive guidance to those banks that now it's safe. It's safe for them to start to custody. It's safe for them to start to issue credit, and it's safe for them to trade and handle this asset. And so if you look at it from a pragmatic point of view, these are the largest, most risk-averse organizations in the country. And from the point that it's safe to do something, to expect, I would think, oh, it might take 4 years. And so the fact that it's happening, we're not even in the first anniversary of the election, right? The fact that they're actually moving in the 11th month, when it was a death sentence to move 12 months ago, I think that that's very auspicious. And I think you got to take your hat off and applaud the people that are running these trillion-dollar organizations that are able to start to lead their organizations to a better place. Now, having said it, they're not crypto native, they're not tech companies, they're going to move methodically, they've got a lot of people, a lot of moving parts, a lot of constituencies to please. So I think it'll be 4 years of progression before maybe the 10% tech leaders have the kind of stack of services that they want.
Vanguard came out and said, never. We will never offer these products. That changed in the last month. And now, to your point, CFTC looks like we're getting a pro-Bitcoin chairman. And Fed Governor Waller last week said that crypto is woven into the fabric of the American financial system. These are things that would have been absolutely mind-blowing even a few months ago.
Yeah, 12 months ago, the over-under would have been outrageous. And, and the irony, though, is Vanguard was very explicitly anti-crypto, anti-Bitcoin. And Scott, who is my biggest shareholder?
I do.
Vanguard. Okay, so they, no force on earth can stop an idea whose time has come. And right now you have 750 million people in the crypto ecosystem. You have something that I think when I got into the space 5 years ago, it was a $200 billion to $250 billion industry. It was $2 trillion 12 months ago. It's $4.5 trillion right now. There's an avalanche of capital, an avalanche of people, armies of people, and their view is this is an idea whose time has come. And even, Vanguard got big because they invented equity capital. The Vanguard 500, the idea that you just want to buy a chunk of equity without taking any counterparty risk. You buy a mixture of 500 companies. And that was their big thing, equity as capital. And now we've got digital capital. And of course, it's a new paradigm. They'll be a bit slow, but they can't help but invest it because money is indexed to invest in credit and is indexed to invest in equity. And once you've got 250 companies that are holding digital assets, and once you start having credit instruments backed by digital assets, the people that run those funds have to own those things. They can't not.